All right, y'all. So, who's here for the first time ever? First time ever. First time ever. All right. Push it that way. Push it away. All right. So that means everyone else has been here once or twice, right? Perfect. So I'm not going to go through our whole intro presentation because I want to give more time for conversation, discussion, talking about everyone's favorite subject, which is money. So we're going to be talking about money, and I want to get more time for that. So if you're brand new here, get connected with somebody that's been here before. Do we have any? Let me get a show of hands for our deal partners, because these are the ones, folks in the room. They got gray lanyards on. If you need to get connected, absolutely. They are actively out there doing deals. If you need to get connected with somebody, you want to meet somebody that's actually working in the business, doing flips, find one of them. They'll get you plugged in to where you need to be, all right? So I'm going to just jump right into it. I am Andrew. That was Michelle, my wife, lovely lady who put all these wonderful decorations together. Whose is this? Who did you borrow this from? Blake? Oh, that's hilarious. So thank you for putting that together. Thank you all for coming on Cinco de Mayo. And what is it? Is San Jose still around on this side of town? They're gone, aren't they? So where does everyone eat now? Coco's and beer. I like it. Montezuma, that's another good one. All right, they'll be open when you leave here, okay? So we're going to dive right in. We're going to talk about real estate investing locally, but also how people are doing around the country, and most importantly, how are you and they utilizing private capital. So we're going to just talk about, this is our full year. All year we've been talking about launching your business in 26, and it's not necessarily launching from the beginning. Like you may already be doing deals, but launching from where you are, not just taking doing the same thing over and over again. It's starting where you are and blasting off, launching your business, launching your career here. So this is another piece of that. If you haven't signed in, you can do the QR code, but I think everyone's signed in. I see name tags. Good job, Marissa. Good job getting everybody signed in. Thank you. If you didn't know, Marissa, she's back there. She runs our home buying company, which is Columbia Cash Home Buyers. Anybody in a red lanyard is part of our team somewhere, somehow. Blake, project manager back there. Julian and Rochelle, they're agents with Lucas Group. And then I got Bishop over here, property manager with Rent Midlands. All right, so they can help you get plugged in as well. And we have some amazing partners and sponsors in the room today. So I'm going to let them talk about themselves and just go down the line. Start from, what is this, age before beauty, or what? Beauty? Yeah. Jonathan, you go first. There you go. Absolutely. So Ray's Flooring is out there on, I don't know, have you counted how many houses you're in from this room right here?
It's a lot.
It's got to be 100, right? Easily. His flooring is all over town. We're going to have to count it. All right. Consistent Capital.
Consistent Capital. We're a boutique investor-focused lender, specialized in DSCR, bridge, and construction loans. So on the DSCR side, we can provide funding on long-term and short-term rentals, whether it's been an existing short-term rental or something you're looking to turn into a short-term rental. We can support on that. On the ground construction side, we've got products to support infills, backfills. We can do small infill community development, subdivision, things like that. If you have any questions about that, we have to talk about today.
Awesome. So them and Rehab Wallet are local, I'd say local-ish, but they have local representation here and also work with a lot of people in this room.
Scott Johnson with Rehab Wallet, short-term hard money lender, mostly fixed and flip. But we do have a land loan package, and we just come out with a new GT loan on the fixed and flip to help you get your own investment.
I like it. I like it. So again, a couple of great partners and sponsors right here, and you guys could talk, come over and network with them here shortly, and definitely get a business card if you don't have one. And we're going to talk more today is about private capital and how you can use that. But guys, hard money and DSCR loans, those places, those people, you still need them. All right, don't run away from them. A couple of our other sponsors I want to call out is Herring Insurance, that do all of our insurance products for everything we own. Deal Finder Data. Well, I guess show of hands, who is like actively researching properties, looking at loans and foreclosures and stuff like that? Are you guys doing that? Okay, awesome. So that's what Deal Finder Data is, and I was just telling Blake and Marissa about a potential deal. The guy is going into, or he's in bankruptcy, and so we're talking through what potentially we could help him with. And I went into Deal Finder Data, and I saw that in 2018 he refinanced, 2020 he refinanced, 2021, 23, or something like 4 or 5 different refinances in the last 6 or 7 years, which has led to, unfortunately, not a lot of equity left. And so I was able to see that right there prepping for the call, which was really great. Was able to, really have a great conversation with him quickly versus trying to guess at some of that stuff. And so then Hendersman, Jim, he closes all of our deals for us. And so you guys, if you need a contact or you need a connection, those are great people to work through and work with. We have a couple other people that will give you discounts if you want to do like mail, if you want to do driving for dollars, like an app, any of that kind of stuff, they're there for you. All right, so we're going to jump in and we're going to start talking about private capital, okay? And so I'm going to get through this a little bit earlier, and I'm going to leave some time for Q&A, some questions as we go through. So if you have a question, stop me and we'll answer it, because the whole point of today is really so that you know where you're going to go. Remember, we're launching in 26. So where's your next step? What are you going to do when you leave here? The worst thing you can do is leave here and not do anything different, right? That's the point of coming. At least meet somebody new or learn something, all right? So we've been talking about this all year, which is, real estate is wide open. We had our partner call today, and we're talking about multifamily, 120 units, apartment complexes, and then 75 unit storage facilities, and then midterm rentals, all this kind of stuff, right? You could do any number of things in real estate, and so it's kind of up to you guys to learn where you fit in and then where you should go, right? Which road are you going to go down? And so today we're going to be a little bit talking about this private lender piece, and then as a private lender, we're also going to talk about private lending as a capital connector, which you may not have heard that term yet, and then also from the investor side, how to best work with private lenders. Okay, y'all good with that? Everybody good? Cool. Good, we're in the right room. Thank you. All right, so how investors, lenders, and capital connectors win together. The point of this is really this business runs when we all win together. When we are putting these pieces together, this puzzle, everybody wins. All right, so just to kind of get an idea of who I'm talking to, what kind of detail I need to go into, who in here has used or has lent private capital before? All right, and so everybody else never had private capital? Is that true? Accurate? Okay, cool. So about half of you have used it or lent it, and the other half, this is brand new. So fantastic. Again, ask questions if you got them, and we'll answer those as we go. All right. So I realized, so I put my old slides. I made old slides in PowerPoint. Then I put them in AI to make them pretty, because I can't make them pretty. Then this one came out in Chinese. So we're not quite there yet on the AI. And then I was like, the weird thing was I refreshed, and then this side came out in Chinese. So I was like, surely when I get here, they'll both be English and it'll be fine. Nope, it's Chinese. So, well, that's not even Chinese. I don't know what that is. But anyway, the point is we're looking to turn this room into the opportunity to connect, to network, right? That's what this room is about. If we could show you how to do this the right way, maybe you can make those connections for your business, for our business, and everyone, what's it? All ships, rising tide lifts all ships, right? So that's what we're going to work for. But there's two things that I've kind of always preach about what we should look for every day. Who knows what those two things are? Tori, I know what you know. Money and deals. Deals and money, right? Can y'all agree with that? Probably a good idea if you're in this business to either have a deal or have money waiting for a deal, right? So every deal needs the capital, and the deal needs to be an opportunity, right? So it's not just because it's an opportunity to buy doesn't mean it's a deal, okay? So what does that actually mean? The deal actually means it's a property opportunity that has good terms, it has profit potential, it works for your business, right? So that's a deal. And then the capital is not just cash in your back pocket to burn. It's funds that investors are using to get to that profit. Okay, so just defining terms for you here, nothing earth-shattering there, I hope. All right, so every day we're looking for deals and we're looking for capital. All right, so in this room we usually just talk about finding deals. But if you're working this business, some of you, and I know for a fact we have some partners that have told me they absolutely hate talking to sellers. Like the finding the deal part is the worst thing that they could do. It's just the emotional toll, also the continuous follow-up is such a pain sometimes that they just don't want to do that. But they're still great with people, and they're great with making connections, and they would be better and are better at capital connecting and finding capital versus finding the deals. So that's where they can actually benefit others and themselves by coming into a networking connection room like this, because there's somebody good at finding deals, somebody good at finding capital. Does that make sense? So I'm going to continue. I'm going to show you guys how to do this the right way, how to do it safely, but I just want to make sure we kind of get a picture of what we're actually talking about. Okay? So we've always talked about this. The capital piece, for whatever reason, I don't know, maybe it's just my TikTok. I don't have TikTok, but my Instagram, nobody talks about going and just finding good lenders. It's always, I guess the pictures are better of the smelly houses, right? The trashy houses, the holes in the floor and all that. So people are always focused on finding the deal, but that's only half the project. So we're going to talk about that. Great, I got more Chinese. Fantastic. I swear, if I refresh, it'll come back. So this is what actually, the capital is what actually allows you to unlock the opportunity that lies in these deals. Have any of y'all driven down Assembly Street and seen was it Bomber Stadium? Does anybody still remember Bomber Stadium? I know you do. You guys know what I'm talking about, Bomber Stadium, right? Is there an opportunity there? Absolutely. What does it take? Capital. Blowfish, that's for that's new Colombians. You haven't been here long enough. These are the Columbia Mets. Yeah. The Bombers were before that. Yeah, it's okay. That's fine. I forgive you. So that is an opportunity. It's an opportunity that's waiting for someone to put the right amount of capital into it. Now, I'm not going to suggest you should go after that one because of other issues that come along with that particular deal. But who knows of one in their neighborhood or along their route to work that is like, man, if somebody had the capital, somebody had the cash, or if I had the money, I would go fix that. Probably you've seen that, right? And so that's what happens when we don't have that capital to go unleash opportunities. All right. And so when we do have the capital, of course, we can take advantage of those opportunities. And when we can take advantage of the opportunities, we can actually earn income. We can create a profit in our business. And then when we can create a profit in our business, we can actually return a return on investment to those lenders who gave us the money. And guess what happens when you give them a return on their investment? You think they want to do it, they're done? They want to do it again. And that allows us to scale and to keep going. It's amazing how this works, right? And then once you've done that for one private lender, they usually have friends, okay? And so that allows you, again, to grow and to scale. So you got two pieces of that puzzle. You got the capital and you got the deal. And when we can put them together, it allows us to scale our business. There's other pieces to this, right? This is kind of like the real estate deal function here. You got somebody that's got to find the deal. You got to raise the money. Somebody's got to buy the property, own it. Then you got to manage the rehab. Somebody's got to be on the hook for all the risk that goes along with that. There's more to this. You got somebody that's got to sell it. Somebody's got to price it right. You know, there's all these things. And so if we look at real estate as a team sport, and you look at yourself and your own skill set. So our little guy, Emery, he played, was Wyman here? No, he left. So Emery is playing baseball right now. And Emery's skill set is, he's the little guy. His best attribute to that team is getting pegged with the pitch, because he gets on base a lot. He has the number one on base percentage, and it's not because he's hitting triples. He's getting pegged and he's walking. But he did hit last night. He can hit, but they just don't throw him strikes. And so he plays a role in there, which is he gets on base. And if you guys think about what is your skill set, like what are you good at? Where can you fit into this puzzle? Don't try to go out there and do every piece of this all by yourself, right? Sometimes, you know, you're like, I got to do everything. I got to do everything. You feel like I have to have it all. And that could be a dangerous place when you're trying to scale, right? You could do one like that, but you're not going to do two at a time, 3, 4 at a time if you're trying to do everything. So think of it as a team sport, and be okay, you know, saying to yourself, you know what, I'm not the deal finder. You know, I'm not the project manager. You know, where do you fit in? Maybe you're the capital connector, all right? Maybe you're that person that can speak to the language of IRAs or people's investment accounts, what's happening in the stock market today, right? If that's your forte, then this might be a good place for you to really lock in, okay? I got all kinds of Chinese. I might have to just go back to the web version because I see more Chinese coming up. All right, real estate works, again, when you have the right people working. As a matter of fact, let me just do this. Hold, please, because it's going to drive me crazy. And where am I? Guess what? There we go. And if y'all have questions, feel free. Now's a good time to think about that. What'd you do? All right. Let's see if that works. It does work. Hot dog. All right. Where was I? See how much better it looks? It looks like I knew what I was doing now, doesn't it? It's almost like it's professionally done. But let me do this so that I can see it. Hold on. There we go. Now we're in business. Okay. So again, when we put ourselves and our team in the right place, we actually can grow better, faster, and be more profitable at the end of the day. So we have the investor operator up here, does a lot of the active activities. So usually, you know, If you do have a W-2 job, it might be a flexible W-2 job. When Michelle and I got started, I was managing hotels. I'd been at the same hotel for about 6 years, had a great team, great property, and I was able to do some work, do some flipping stuff before work, at lunch, and after work. So I was flexible enough to kind of move throughout the day. In hospitality, you just got to be available, and you didn't have to sit at a desk 9 to 5. So that's that person. The private lender is like on the opposite end of that spectrum. The private lender doesn't have to worry about being anywhere at any time. They could be working 3 jobs. Matter of fact, just to put this plug in your ear, some of your best private lenders throughout the country, and this is from other masterminds and just people that are doing this business, will tell you the doctors, the lawyers, the accountants, the folks putting in a lot of hours, billable hours, are your best private lenders, because they've got the income, but they don't have time to go and do anything else with it, because they're billing by hours. They can sit there for an extra hour at the office and they know exactly how much they're making, versus going and trying to find a deal, right? You see that difference. So they make really great private lenders. They're not going to be managing, or shouldn't be managing, the properties. Then you got the capital connector that's able to connect that lender to the investor, and the deal finder, of course, is bringing the properties into this whole mix. Okay, so this is really a great system, and I'm going to use this opportunity to tell you, to warn you against partnerships. And my friend Rob back there we just talked about partnerships and how bad they can go. So partnerships essentially in this business are a bad idea. Just go ahead and just assume it's a bad idea. Usually what happens is you get 2 people that don't know what they're doing, and they think, hey, let's do a business together, because neither one of us know what we're doing, and 2 not knowing what we're doing times each other equals more not knowing what we're doing. So it doesn't work out. So if you just in your brain say, I should not partner, and then I'm like, well, what about this? How does this work if you're not going to partner? Because this isn't a partnership. You're not signing up to be business partners. You're not doing an LLC together. You may say, hey, let's do a deal together. We can go on a JV agreement for one, or we can do a couple like this. Let's try this for 6 months, not as a partnership where we entangle finances and LLCs and taxes and stuff like that. But let's just say, hey, if you can go work on finding a deal, I'll work on finding capital. And if I find capital and you find a deal, we'll chat and see if we can make it work. Y'all see the difference between signing up to be partners and not having anything to do versus I found capital, I found a deal, let's JV. You see the difference? Yeah.
So what you're basically trying to say, if I understand you correctly, is you much more prefer to do contract work than partnership.
Correct. Because
It's a contract.
and it can be over in an instant. And if you go into a contract deal like that, you have clear laid out roles, definitions, who's doing what, who's not doing what, and how you get out, right? So that's the difference. And so that is a good way of working. Going into a blind partnership, absolutely not. The other piece, and since I'm on this soapbox, is look for professionals, right? So you're in this room, there's some fantastic people in this room. There might be people in this, I don't know if, I can't say that. I don't think there's anybody in this room that's crazy right now, but Facebook, I can't help you, right? There's a lot of crazies in Facebook, and we don't know who they are, where they are, and I just want to warn you about connecting with people that just because they're in the same Facebook group, or just because they come to the same meetup, not this meetup, but other meetups. Like, just because you're in the same area doesn't mean that they have the same values or work ethic or financial situation. Like, doesn't mean it's a good idea to start working or even doing contract work together. Does that make sense? So I just want to warn you on that. If you have a question about anybody in our group, in this community, Facebook group, like at the table with you, just come to me, and if I can't help you, somebody on our team will, or if we don't know the person, we'll tell you, and that would be, your warning right there. Okay, I'm giving that to everybody. All right, so think about bringing value to the deal as the capital. The deals need capital, okay? And so it's just as valuable as the deal itself. Does that make sense? So you may not be swinging the hammer, of course, but if you're swinging that wallet, you walk in, whap, throw that on the table, it's just as good, right? So just remember, as we're thinking about where do I fit on this team, how can I bring value? Bringing the capital is just as valuable as bringing the deal. Now, just because you have money doesn't mean it's good money. Doesn't mean it's good capital to bring to a deal. Why would I say that not all money is good money? What do y'all think?
So like the percentage, like you have how much you gotta pay back?
Yeah, a rate. What else?
Could be dirty money.
I was wondering if somebody would say that. It could be dirty money. Sometimes I don't ask questions. But if they do show up with 50 grand in cash, maybe you should ask questions, right? The big thing, and this is from experience, so just trust me on this, not all money is good money, because some money is desperate, some money is, the word I'm looking for is what? Emotional, yes. Some money is emotional. Some money comes with strings attached, where just because the lender has lent you money and you're like, thank you, I'll give you your money back, I'll pay interest, or you'll get it in 6 months, you think, man, I'm ready to rock and roll. Sometimes that lender thinks, here I come, I'm picking out paint colors, I'm here with you. That's not good money. That's a problem. And those are the conversations that you want to make sure you have ahead of time with that. And it comes with emotions, right? So just think about that, be aware of that. All right. So, this is the term private money. I've been throwing it around all night, obviously, but it's the money that is coming from either an individual or a group of individuals, usually from the IRA accounts, their own investment accounts, maybe a HELOC. We've actually got folks that were able to tap into business credit to do private capital, private lending, especially because if you can finagle into the 0% interest, you can really do an arbitrage on that, which works out well. So this is the kind of the life cycle here, right? You got to get the lender gives the capital, you get it deployed into a real estate project goes, and then you pay them back and you return the money. The big difference here and what makes private money is that it's not a bank. It's not you go online and you apply. You don't fill out a form. If you're doing it right, you're building a relationship with a lender or a couple of lenders, or like a small group of lenders. And so with that relationship-based loan, it comes with great upside, but also great responsibility. And I know I remember that mostly from Spider-Man. How do you say it? That's it, yeah. But I think it's also somewhere else, like in the Bible or something, right? I'm looking for Michelle to tell me which verse, but she's talking. So the relationship-based loan is more, I don't want to say it's more important. You got to pay your banks back, but the upside with the relationship goes higher and higher. With the bank, you're still and always just a number. Doesn't matter how many deals with them you do, how many times you return the capital. If they decide they don't want to do those loans anymore, then you're done. Okay? So treat it that way. Great responsibility with those funds. Okay? You got purchases, renovations, bridge loans, flip projects, and rental acquisitions. These are all typical transactions that we do as investors, and you can use private money, bank money, hard money for all of these. So just think about that as far as like bridge loans, renovations. You can buy a house with your own cash and then do a private loan to do the renovations. You can buy properties, rental properties with private loans and then refinance out into a long-term note. Or get this, a lot of people don't think about this, but some private lenders would love to lend on your rental assets because they want a long-term deal. They are like, yeah, I would love 20 years of something consistent and stable, right? It depends on where it fits in their portfolio. So you can tell the AI did all my images. So this is where I think everybody in here, if you're an active investor, raise your hand. Or if you're doing deals right now, okay. Do y'all all agree private money is useful? Does anybody not agree with that? Okay. So I'm just going to tell you again, maybe there were a few people that were brand new to this, but the reason that it is good and the reason we are talking about it, and I'm trying to open your eyes to the availability, is that you can close faster, you can close cheaper, generally less upfront fees and things like that. Of course, you can get the renovations. Sometimes you can get renovations funded up front versus a draw process, depending on who it is and how much it is. Yes, you could scale beyond your bank limits because the private lenders are typically not looking at your credit portfolio or whatever. They're looking at who you are and the deal itself, right? So they have higher limits for you. And the biggest thing is right here is that speed. In this business, we solve people's problems through real estate. And all that is people have financial problems, personal problems, property problems, and the way for them to fix that is by selling a piece of real estate for many different reasons. Maybe they need the cash, maybe they just need to get rid of that, or they need the clean break so they can, get rid of whatever's tying them to it. So we solve those problems. And a lot of times, those problems come with a time-sensitive deadline. Like, it's going to happen now. It's now or never. Foreclosure is coming. Bankruptcy is coming. Divorce is coming. House is falling down. I'm moving to Alaska. Whatever. And so when you've got speed on your side, you can actually capture more deals just by being faster. So I know we got a lot of people in here that know that. Rehab Wallet knows that too. I'll give you the plug because I think Sean and Monique aren't here, but I think they're talking to Rehab Wallet because they got to get speed. They got to get speed on a particular deal. All right, so let's talk a little bit about the other side. And I'm not going to ask you to raise your hand, but if anybody in here is thinking like, man, I should be a private lender, I need to fit this in my portfolio. Maybe I've got a retirement account because if y'all don't know, I'll tell you, if you are using a IRA, self-directed IRA, you can't invest in your own business and your own deals, but you could lend it to other investors. And so maybe you're thinking this might be a good idea. Well, here's the reason why lenders lend. Money sitting in a savings account is literally melting away. It's just being taken up by fees, or inflation is just tearing it up. There's nothing left if you just leave it in a savings account, which is unfortunate. CDs and some of the money markets and stuff like that, that's not going to keep up either. It's not going to keep up with inflation. The treasury bonds and all that kind of stuff, it's a good place for stable growth, but it's not going to get people to earn more. That's not going to get people to increase their retirement accounts. It's just really going to keep you flat. It's going to keep you from losing. So that idle money is either losing or staying stable. And so investors, private lenders, want their money to grow. They want it to work for them, so they want to put it to work. And that's where we come into play, because of the real estate assets are very attractive. Because what happens if you don't pay your lender back? They come back and take the house. And real estate is one of those things that is usually is worth more, even if you don't do anything to it, just by time. Right? It's one of those amazing things why we do real estate, why all y'all are here probably because of that fact. And so the lenders see that as a backstop. It is protection for that capital. It says, hey, I know I'm putting it out there in the streets, I'm letting somebody use it, I've got a expected return, but if all else fails, I've got a property I can hold on to and then renovate or whatever I need to do. So that amazing piece of it, like just given the security, I mean, if I could convince my private lenders just to say, yeah, you know what, this is more secure than a savings account because these banks could fold. If I could convince them just to give me that, we don't have to pay 10%. But the nice thing is most lenders do know that if you're investing in real estate, they know you're probably going to make a return on that capital, and they got a pretty good idea of what your margins are going to end up being. And so they're going to ask you for a little bit more than just the 4% that you see in the treasury bonds, right? So these private lenders know that if they put it to work in real estate, it's secure, it's safer, but they also get a higher return, okay? So as a lender, it's attractive. So I was talking to lenders. Let me talk to investors again for a second. If you are actually talking to a potential lender, you're talking to a bank, not a banker, don't worry about them. Maybe. You're talking to a lawyer, an accountant, a doctor, a dentist, whatever. Any professional, anybody that wants to lend money. And you're able to explain to them what this private money thing is. You're not the one going and asking for money. And this is sometimes a shift for you all as investors. You're actually presenting an opportunity to a private lender for them to jump on to this train right here. Better returns, real estate backed, predictable terms, local operator, somebody you know and trust, and you can see your money doing something. You're actually providing an opportunity for those lenders to get into something that they may have never heard of before or never had the opportunity. Okay? So think about that, understand that, and really believe that, because that is the truth. That's absolute truth. There's some investors in here that can back that up, that once private lenders know and see the track record, they want to join in. They want these things. All right, and so let me get you guys thinking. The first step, again, is not to go ask for money. You're not asking, like, hey, can I have some money? You're just educating, letting people close to you know that this is a thing. All right, so y'all picture that, think about that. Who do you know? Who can you think of? Who can you talk to? The first step, again, is just to say, hey, have you ever heard of private lending? Have you ever, where do you put your investment capital? You got any good stock tips? Okay? So these are the type of people to be thinking about. And we're going to have an exercise in a minute with that. So we're not going to randomly go ask people for money. That's weird. Okay? Y'all agree with that? If you leave here and you just start asking people on the street, hey, do you want to lend on this deal I got? That's weird. Don't tell them you came here. Like, that's not us. So you want to build trust, and I'll tell you the number one place to do this, and this is the secret. I'm going to let the cat out of the bag. Facebook, Instagram, TikTok, LinkedIn, YouTube, whatever else. Just show what you're doing. If you're actively investing and you're doing renovations or rental properties, or you haven't done a deal yet, but you're out looking for a deal, show it tell your story, explain what you're doing, how you're doing it, and that will build the intrigue and the interest enough so that the people that are on that circle may start coming to you, or at least when you mention it, they'll ask questions. Okay. So, building relationships. Start with the relationships you already have, people that are close to you. Again, educate first. Educate on that stuff I just talked about, why this is a good idea for them. Educate on our local market. If y'all been here any amount of time, we go through a lot of the stats and why Columbia is amazing, why we're the best place to invest right now. It's the hottest state in the entire country of people moving here, right? Educate on that. Let people know about that. Of course, we'll get into this in a second, proper agreements, proper loan documents, contracts, attorneys, have them review it, any advisors and stuff like that. If you're helping them with a tax implications, say they got a windfall and they need to figure out how to divert taxes or push them down the road or whatever, unless you are actually, don't just involve another CPA. Even if you are a CPA, go find another one to help them. You do your own stuff. Okay. So involve the professionals, protect the relationship at all costs here, because one bad deal, one sour relationship there will tarnish the rest of them. Okay. So you don't want to go say hey, I got to get this one private lender, we got to make this deal work, and then you end up rushing through something that makes it look unprofessional, makes it look like you don't know what you're doing, and then they tell their friends, and now you're stuck. Okay, you got to start all over. All right, so protect the relationship. If you don't know what you're doing, and I think this is on the next slide, don't lie, don't make stuff up. If you're a brand new investor, say you're a brand new investor. Bring them in, because they might be a brand new private money lender, right? And then y'all both go to the attorney together, right? And you both come into this room in this meeting right here, and you both ask questions, right? That's how you build a relationship with somebody, not going and saying, oh, I'm a professional, I've been in real estate for 10 years, and all you've been doing is watching HGTV and looking at Zillow at 1 a.m. scrolling while your spouse is asleep, hitting you because the light's too bright. Who's doing it? I know some of y'all are doing it. I know it. Michelle. Yep. So I kind of already said this. Just share what you're doing, right? If you're brand new and you're just learning how to do it, say, I'm brand new and I'm learning how to do this. Okay? Private capital is likely not going to show up on your door the first time you post about it, but keep doing it. Okay? Just be honest out there. Be open with that. Even you could say this right here. I'm going to a meetup at Deal Finders. You should come along and check out private lending. Wouldn't that be a great idea to put it on Facebook? Y'all can do that next time. Okay, next time I would expect to see some posts. All right. Don't, and this is a big one that some people try to make a big pitch. Y'all, ChatGPT is amazing. Yes, I know it can do everything you want it to do. Do not go in there and try to make a pitch for your private money on ChatGPT, because it will lie and it will probably make you look dumb. And it'll be overkill, and you'll ruin that relationship because you're not going to be open and upfront and able to connect. Okay? So, the capital connector. I talked a little bit about it, but I'm just going to hit it home right here, because this is actually, when I mentioned capital connector, who in here thought, oh, that's a good way to make money? 1, 2, yeah. 3, did you have your hand up? I didn't see out of the corner of my eye. All right, we got 3 people. I'm going to just lay it out here. Capital connectors make a lot of money. Do y'all use brokers? Do brokers come to y'all? Brokers are capital connectors. Now they do it as a profession, but they make 1, 2, 3 points, 3% on loans. I don't know about them. I'm not suggesting, I don't know any of their numbers or prices, but loan originators and brokers, that's all they are. Did anybody ever think about that? Yeah. They are just finding the people that have money and they want to lend, and then they find people that have the deals that need to borrow. It's the same thing, except they're going to institutions, they're going to companies, private or hard money and banks and that sort of thing. A capital connector, in our sense, is just doing the same thing with private money. You're looking at deals and operators, remember the flippers, the active investors, you're looking at them and you're saying, you know what, that's a good one. I've got this friend or this doctor or this, teacher that has some capital I know about. I'm going to see if we can make a connection, and maybe I'll make a point or two. A point is 1% of loan value, in case y'all don't know that, okay? And that happens every single day. We're paying capital connectors right now just to do that. All right. So you just you do the introduction again, contracts, lawyers, agreements, all that stuff. Just get in there and be a part of it. Connect and get that idle money to work. Right. I don't know why I pointed that way. So again, just bringing that home. Okay. The good operator, what you're looking for when you're going to be a capital connector, you're building that relationship with the lender, the private money lender. And so now you're protecting that relationship. So you want a good operator that you know is going to get the deal done. They're going to do it hopefully quickly or at least on time, whatever their timeline is. And they're going to get your lender who you have a relationship with paid back. Okay? So that's what you're looking at. You don't want to just go to anybody that has a deal, right? Because then you won't be able to use that money again. The idea is to connect it over and over again, right? So as a capital connector, you're looking for a strong deal, a good plan, somebody that's done this before, some experience, maybe somebody that has a good, like a contractor on their team, or they're licensed, or they have the licensed contractor in their, in their plan already. They know what they're going to do, exit strategy. Hello. They know how they're getting out of the deal, right? So that's what you're looking for. They have all those things, but they need capital, and that's where you come in. Yeah.
I'm a little confused here on the capital.
Connector? Mm-hmm.
Right. So I connect you to his money. I take 1 or 2 points.
Mm-hmm.
The next time you come up with a deal, you go straight to him and I don't get paid.
That's why you want to work with somebody you would trust. Yeah. You're building a relationship with the lender, and that's a conversation you're having. Yeah.
Okay.
I can tell you that's not something that we would do, because if it's a good capital connector, that's just not one connection, right? So definitely could be a fear, similar to being a deal finder and like, hey, I got this deal, worried about somebody cutting you out of it. So contracts, agreements, forms, that can be resolved. But good question, great question. Anybody else have that fear? Somebody, I know there's some head nodding. Yeah. All right. So here's how you protect it. If your private lender needs these protections, borrower needs these protections, capital connector wants these protections, right? So all these things, the loan agreement, the promissory note, the mortgage, obviously a term sheet, insurance. Y'all, this gets missed so many, especially with private lenders. They miss this like way too often. And it's really on the operator to make sure there's insurance, but the private money lender and the connector should say, we need insurance and we need to be named. That lender needs to get paid back if that house burns down. Okay? And of course, do it with you just use the attorney. And this is a big one, have the funds go through the attorney, right? You can do partnerships, you can do deals all the time, and yes, you can send your funds to if you've done a bunch of deals with this hard money or this private money lender and borrower, and you know that where the money's going, you've seen the property, you've got the HUD and all that kind of stuff, you can invest and go straight to the lender, the operator, right? You would never ever do that on a first or second or third deal. Like, that is no way. It would have to be very, very, very great relationship, and you know what's happening, right? Every other like 9 times out of 10, it goes straight to the attorney's escrow account, and they divvy it up. Okay. I know that I've just recently heard some crazy stories about some of that stuff where it goes to the operator, and the operator didn't actually show up to close on the property. They got the funds, but then the attorney's like, they never came and signed. They didn't show back up. And, that wasn't here, but it's like, wow, that can happen, right? And unfortunately, fraud and criminals are out there. So protect yourself. All right. These are the 3 questions. And I've got something for y'all. I'm going to post it in the Facebook group because it was a lot. It was a lot. So we've been borrowing funds, private lending, since Michelle and I very first started. My mom was our very first private lender, even though she kind of bailed on us at first. And then she came back, and then our neighbors were our private lenders. And I didn't even know that it had a term, private lending. So we've been doing this 10 years now. Tens of millions of dollars that we've used and given back and paid interest and all that stuff, right? I've never, ever in my life seen the document that I got from this. He's a surgeon in Indiana, and he found us, and he says, hey, he heard about South Carolina. He's like, hey, I want to lend in South Carolina. I want to do Columbia because the prices are better. I want to talk to you about it. And I said, great. We here's the deals. Let him see our deals, what we got going on. And then he sends me this list, and I kid you not, it's this long of questions that he wants answered per deal. And it's like, ChatGPT got overworked. It was like, I'm done. It was like, I'm done with this. It's too much. But it was every question that could ever be asked by a lender. And Jonathan, I'm giving it to you. This is what I was working on for you. But this is every question that a lender could and would ever ask. He's thought of it because he's building his own business as a private lender, and he's got that doctor brain where he's just like went through everything. And he's in like Indiana, and we're in South Carolina. So he needs to know these things. Like, I get it. He's not here. And so I had that whole list. And I was like, man, I looked at it. I was like, that's too much work. I'm not doing it. I'm just not. It's just too much work. But now I look at it, and I say, you know what? Why not have those answers anyway? They're all valid answers, and we know all the answers. Like, we know how long it's going to take. We know what kind of flooring we're going to put. We know what the comps look like, right? We know these things, but it's not in a document. Why isn't it? So I'm going to give that. I'm going to put that in the Facebook group. I am cleaning it up. That's what ChatGPT is doing for me so that it's usable. But you guys could just do that for every deal you're looking at, and then any lender has these questions, you already got it answered. That's elementary. Does that make sense? So know everything. Think of every possible outcome and curveball that could happen, and just go ahead and have it ready for that lender. Okay? So these are easy ones to answer. Collateral, your mortgage, your paperwork. How do I get paid? Of course, you got to know that stuff. And then what happens if it goes wrong, right? There's never a chance that I don't want to say never. I don't see a reason why you should force your private lenders to take you through foreclosure if you're having issues, right? But you better have all that stuff in writing of what can and should happen, okay? That's just, you do your business how you would, but all of it should be in writing, okay? That's the same dude from earlier. So anyway, borrowers, of course, we've talked about this. You want the reliable funding, right? Just because someone says they have money doesn't mean it's going to be the best money for you. Make sure that they are going to show up at closing for you. Make sure those funds will be available when they say they are. Way back when we first got started, my mom said, yeah, I'll be able to lend on this deal. You're going to flip it. It's like 30 grand. It was the renovation funds. And then we get there and it's like, all right, Mom, it's time to close. We're going to do this deal. She's like, oh, I didn't know that was for real. Like this, we were very beginning, right? I can't fault her, but she's like, I didn't know you were serious. I was like, yes, I was very serious. But she spent the money. Like they used it for something else. And not the best reliability there, right? But she's come around. She's good. We're all on the same page. She is a private lender from her IRA account, and which she can't actually do for us, so she has to do it for other people, which makes me a connector. Look at that. I didn't even think about that until I start talking about Mom. But anyway, so you want to make sure that this person's going to show up, right? They say they have money, but do they really? Don't get yourself drug along and left at the table. Are the expectations clear? When does that money need to be there? Great communication is always the best. Marissa she loves some good communication with some lenders. And if you have a question about what could go wrong, she'll tell you. Sometimes funds are floating around. So, and then of course, as a borrower, you're wondering, is this a lender? Is this a partner, like a person I can partner with and do deals and see us growing over time? If it's somebody you're like, oh my gosh, I don't want to pick up the phone, I can't stand talking to this person, but I'm glad they got money, you're probably not growing over time. It's probably going to end up resenting the relationship over a period of time. So, tread lightly on that. All right. So we're gonna get to the finish here of the connectors, what you're actually doing there. Again, we're talking about outlining for the borrower, outline for the connector. What are you going to do in that? Are you going to be a part of this the whole time? Are you going to help with the communication? Understand, if it's your lender, you want to be a part of that. You want to talk them through it, let them know how the project's going, that sort of thing. Create those conversations to build relationship, okay? Because again, it shouldn't be your one and only. If you don't have deals yet, you might have some soon, okay? So build that relationship. So here's your task as we're going to wrap up. Y'all grab a piece of paper or get your pen out. You can do this on your phone. And I'm not going to give you 2 whole minutes. I'm just going to give you 1 minute because you should be able to think about this. Think about these folks, who owns a business, who works long hours but has a high income. Who do you work with now that's looking at retirement and wondering about that 401k? What is the stock market about to do? I don't know if y'all remember back in 2008 when people were trying to retire, they might have been 70 years old, but then that stock market took 20% off. They had to stay at work. There's some real fears right now of, yes, stock market's been growing if y'all are looking at your portfolio, maybe 18, 20% over the last 3 years. But is that going to keep going? Is it time to get something stable, like in a private loan with a real estate investor? Okay. Who talks to you, and this is a good one, who's asking you questions, or who around you is talking about real estate and just in their conversations? Those are the people to start talking to and looking at, potential private money lenders or, deal partners. Okay? Anybody that has 1 or 2 rental properties that they've had for a number of years. This is a writer downer, as they say. If they have 2 rental properties and that's all they've had for more than 3 years or so, they're done. They want out. They don't know it yet. They want out. And if they have equity or if they paid them with cash or whatever, those are the people that know real estate, they get real estate, and if they haven't grown that portfolio, they're probably they don't want to operate anymore, but they want to be a part of the game, a part of the fun. So if you know anybody like that, let me know. We'll buy the houses, and then they'll have some capital for you guys to work with, okay? You got it? We're good? There's some landlords in here that are like, yep, I get it. Michelle and I were almost out. I kid you not. 10 years ago, we were done. That 3 rental properties, Michelle is still done, I think. Yeah, she was out. She was done. That is the worst place to be. It looks like fun on TV. It's not. All right, moving on. I know y'all are getting antsy here. So if you have questions, remember, if you have questions, raise your hand. All right, education. These are your opening lines. I want to make sure I give you something to leave here with that you can actually use to make a difference in your business. So here's some opening lines. Have you ever heard of private lending? If you're doing a deal, a lot of people like to talk about, oh my gosh, I'm flipping this house. It's amazing. Yeah, we're going to add a bathroom. We're going to put some great LVP flooring from Ray's Flooring. It's fantastic. And we don't talk about how we got the funds. We don't talk about how we financed it. But if you're talking to another professional, right, someone like in the business world, or somebody like that has funds in a retirement account or something, or a stock market account, they might be wondering. They won't ask because it feels invasive almost, like, how did you do that? But if you share, you start talking about, oh, I funded this through Rehab Wallet, but I'm really looking to do private next time, then it opens up a conversation, okay? Similar, do you know how we fund these deals? If you're not doing a deal, just say, hey, you know that they funded that investment there through private lending, that flip that's going on down the street from you. I bet they use private funds. Just bring up the conversation. Talking about security of the real estate, why it's so good to have your money be secured by something. Again, I just think about the stock market. It could have a major swing at any moment. Who knows? So, again, anybody that likes real estate but does not want to manage property, those are your landlords. Those are your 1, 2, 3 property landlords. They're done. Okay? Again, this is just opening the door. Everything I've told you today, all those different reasons why and tactics how to do this, that's what you want to share with potential lenders and operators. Okay? Of course, and this is our final checklist, your deals have to make sense. Putting money in just for the sake of putting money in is a recipe for disaster. It's not actually secured by real estate if the real estate is not worth anything. Can I get an amen? Right? It's only secured if the real estate's worth more than what the funds are in. Rehab Wallet knows that very well. Right? So remember that. Just because there's an operator, or just because you want to put this much money in, doesn't mean that's a good idea. And you all here, if you I have a ChatGPT. I don't know why I'm on ChatGPT today. It's AI week, but we created. Bless you. We created a ARV calculator within ChatGPT for our deal partners, and I'm going to get Marissa to remind me to post that, and I'll send that to you guys. I'll put it or maybe I'll send it through an email. But it's basically, it'll help you determine the ARV of the property. So if you're looking at it, or if somebody's bringing it to you to fund, to connect with capital, make sure that the property's worth more than what the capital is, okay? Again, budgets, equity, written exit plan, using an experienced operator is always preferred there. Look at HUDs, look them up on tax records or Deal Finder data. You can just type in the owner, the flipper, type them in, and it'll tell you all the flips, all the properties they've owned. You can do that. All right, yes, this is my favorite. Capital is powerful, but it will not fix your broken deal, okay? No matter how much money, you can make it better with money, but it doesn't mean you're going to get that back, okay? So you can't fix a broken deal with it. Be responsible there. All right. So, of course, we are active buyers. We're active borrowers. If you have a question about how to do that, we have paperwork that our lawyers and accountants have drawn up. but I'm going to send you to your lawyer and accountant to look at your stuff. Okay, we can share all that information about what to ask for, how to put it together. A lot of your lenders will actually have that for you already. Okay, so this is all of this is what we are actively doing right now. How we manage, how we fund projects today. So this, if you have a question, if you're trying to figure out where you fit in there, just let me know. Let somebody on our team ask the question or whatever, and we'll help you either get you connected with somebody that can move you along, or we'll jump on a phone call, take a few minutes, and we can talk through it and see what's best for you. All right. So this is our local opportunity network. Okay. This is what Deal Finders is. This is where we're building. When I say launch 26, this is what we're launching in 26. Is this opportunity where within these walls you will find these opportunities to network, to connect, to launch your business as we build Deal Finders into that network. Okay. So again, just because someone's in these walls doesn't mean they're going to be the best person to work with or borrow from or lend to. I'm not saying that. We're not vetting everybody in here, but with this community, you can find people like that. Okay, so just let me know if you're thinking about working with somebody. Don't pay anybody anything like that unless you've talked to somebody on our team or you've vetted them through another referral. Okay, I got to give that disclaimer. But that's the point of this room, is to keep building those opportunities to do that. All right. So be thinking about how you can either be a capital connector or a deal finder, or do your own deals right now with what you have. Okay. So I think this is where we start to wrap up on respect the money. This is treat the capital like it's your grandma's last dime, because it might be. Your grandmother might need that dime. All right. So don't skip all the stuff I said. Don't skip the documentation. Don't skip the due diligence. Right. Run the ARV. Don't make promises that are not possible just because you're trying to get the deal. You're trying to get the funds. Right. Make sure you're not fudging your numbers to make the money part work. Don't misrepresent your experience. Don't lie about what you've done, where you're going, what you're doing. Make sure you have a plan for the capital. We do see sometimes with new folks coming in is they'll just say, I'll borrow money and then I'll go find the deal. Don't do that. Don't do that. That's a bad place to be, because guess what? Once that money hits, where does it go? Y'all know. It's gone. And you'll be like, oh, I used to have money for a deal. Now I need to go borrow money for the deal that I was supposed to get with the last money. And it's no bueno. Okay? So, relationships is the power. Okay? So be conservative, be clear, communicate often, use professionals, and protect your relationships. As if you just think through those 5 and work on those 5, you will be good. Okay? So this is your homework. If y'all will, you can take a picture of it. I'd love to hear or see somebody just say in the Facebook group that they actually did their homework from this. But I'm not your teacher, so I'm not going to grade it. But I'm telling you now, if you actually take time to do this, you'll find some gold in there. All right, write down 20 people who may know capital. That's not right. Who may have capital in your network. Okay. 5 educational conversations. Yeah.
And I just wanted to encourage the group. My wife and I were sitting in the same situation last year.
Yeah, that's right.
This is the same conversation. And we did that. We did the exercise. We actually wrote down individuals' names that we knew.
Yep.
Potentially been private members. And at first it was blank. We were like,
Yeah.
what do we know? So we began to write. And we're faith-filled people who believe in God. We wrote those names down. We left the names there. But God moved in a way where He had somebody ask us to become private members.
Wow. Who's on the paper?
So I admonish you tonight, you should write it down. Because the Bible says that you write your vision and make it plain, write it down. Write the list
Amen.
that you may know, and God may manifest in your life, and I believe that He will. So I just want to give this that little testimony that this is real.
Yeah.
And we're in the midst of deals after deals after deals because we wrote a vision and made it.
Yeah. Amen. I love that. Way to take action. And I didn't grade you on it either. You just did it. So yeah, do it. Again, it works, and it's not because you wrote them down. It's because of who you become when you do that, when you take action, right? And you open the door for the Lord to step in. But the 5 educational conversations this week, again, you're not trying to close anybody in private funds. Okay, that's not the goal for the first conversations. You're just opening that door again, and you're seeing what comes in. Okay. Yeah. Yes.
If you're telling the lender that you're going to pay them 2.4% interest on a 6-month note, you got to know what that rate of return is. So if you say, hey, what's that rate of return per annum? If you don't know how to do it, then that's what they're going to ask you. You can tell them 2% origination, 12%, but if they look at the cash on cash return with a 6-month note, it's going to be a lot lower than what you're telling them. So you got to be able to explain that. So that's something to really know when you're approaching someone about private money, explain the rate of return.
Yeah, absolutely. Let them know, what is the number? What is the return on that investment and the rates? And yeah, anybody if you can't finish the conversation, if you can't show the numbers and the proof and how this actually works, bring them into the Deal Finders community. You can bring them to the events, bring them into the Facebook group, connect them with what's actually happening, and so they actually see real estate in action and investments in action, private money in action. That's a big piece if you're introducing someone totally cold to that idea, right? Because they got to see it in action, right? They got to see it happen. Okay, so that's your homework assignment, and we have proof that it works. So I'd love to see somebody post that in the Facebook group. Let us know. All right, yeah. So that's your homework. Before we stand up, just where are you? Have an honest conversation with yourself right now, and then we're gonna be done. Of where are you in your journey right now? Where are you? Where's your launching point? We're launching in 26. Where are you today? Where's that pad? And where are you headed? Right? You got the capital. You know where the capital is. You need the capital. You're just learning, and the process is a little overwhelming. That's okay. Know where you're at, right? Or you want in. You're ready. You've learned it. You need to dive in and get connected with the network in the community here. Okay, so where are you? Take an honest assessment of yourself, and it's okay. Everyone in here is a different place. Everyone in here has different goals.